I strongly disagree with the popular narrative that we should always be 100% diversified across asset classes and that time in the market beats timing the market. I don't think those things are true if we know what we are doing, if we know a market well enough. For example, I've talked about this approach several times on this channel. There is a way to time the Bitcoin market and outperform buying and holding. We just stay out of the market whenever the price trends down, whenever we are below the moving average, and we bet on rising prices whenever we are above the moving average. I have run simulations of buying and selling according to that fixed rule set based on different moving average durations. And the best moving averages are the 44-day for Bitcoin and the 125-day. So that's the long-term result of the 44-day. So that's on a logarithmic scale. That's the backtest result versus buying and holding Bitcoin during the time frame. Here is the same for the 125-day. What we see here plotted, that's the 125-day. The line in orange, that's the 44-day SMA. So interestingly enough, we currently have contradicting signals. The shorter term moving average says we should be betting on rising prices. The longer term moving average says we should be betting on falling prices. In this video, I want to discuss something else though, because I've talked about this approach time and time again on this channel. And of course, I also put a lot of money myself in this strategy. But maybe there's a way to refine this even further. Because here's the thing, whenever we are very much extended from a moving average, maybe it makes sense to take profit a bit earlier and not wait until we get closer to the moving average again to then do the actual position change. So have a look at what we see here at the bottom. Let's zoom out a little bit. This oscillator at the bottom of the screen, that shows us the difference of the current price relative to the moving average. So this is now the 44-day. This dashed line, that's whenever we are actually crossing the moving average. And we can now have a look at when are we potentially turning around. For example, it seems like it's a potentially good buying opportunity when the current price is roughly 34% extended from the moving average. So that means buying over here and not waiting until we cross the moving average. It also means buying at those other extremes, right? Whenever we sell off very quickly, the market might be short-term oversold. And the same is true the other way around. When we are 17%, maybe 30%, maybe even 45% above the current 44-day simple moving average, things might turn around. So again, let's zoom into the recent price development. That would have meant selling at around 72K. It would have meant selling at around 100K. And interestingly enough, those were also the price levels when the long-term holders tended to sell. Currently, we are very close to the 44-day SMA. We are not very much extended, so the current rally has the potential to last a bit longer. But there are quite a few signals here. There is quite a bit of noise. And again, the 125-day simple moving average tends to work almost as good as the 44-day. So let's then look at its extension. Now, this is interesting. It seems like we extend around 45% below the moving average at the end of a bear market, right? We went here from 20K to 3.5K. We then went from 69K down to 16K. It seems like always when we end a bear market, we also get very low relative to the moving average. In other words, the price tends to go down at a rate we usually do not see. Most of the turnarounds happen at already 25% below the moving average. And that's true this time as well, right? We have hit the 25% below the 125-day SMA, and now we're getting closer to it and potentially cross it again, which of course would be the most bullish signal, because then, according to the backtest, both of the time frames that tended to work well to time the market give us a green signal. But I find this quite fascinating. It gives us an interesting data point when it might make sense to rather take some chips off the table and potentially stop following the trend, at least partially. Again, currently we are not extended at all. We have just come from a quite depressed level right on the 20th of November last year. And since then, we are coming back to equilibrium again. Now, why might this strategy work in the first place? I think it's because crypto tends to come in waves, right? There's times of excitement where a big narrative is spread around, maybe acquisitions through treasury companies, maybe acquisitions through ETFs, maybe some regulatory changes. Everybody gets excited, everybody buys into the asset, and then the long-term holders tend to sell into the rally, potentially depress the prices, and then things turn around. So things simply come in cycles, and those cycles don't have to be 4 years. Those cycles can be much shorter in duration. Narratives do not last for 4 years. And again, when we backtest the best moving averages, if we go beyond 200 days, we tend to get very close to just buying and holding. But what I also like about this backtest result is that overall, following moving averages tends to beat just buying and holding Bitcoin. So it's not even that important what moving average we take. The vast majority of them does better than if we just bought and held. And so that's, I believe, a very strong indicator that following the trend makes sense. That timing the market for some markets does beat time in the market. It's probably very much dependent on how mature a market is, how strong the competition is. I did the same kind of backtest for the euro versus the US dollar, and over there we do not have any edge whatsoever. Over there we do see how following trends is simply just hovering around the zero line, around buying and holding. Probably as more quants enter the game, the edge is going away. But luckily for us, crypto isn't yet that mature. Luckily, there is still some edge to be had by relatively simple approaches. I mean, this is just a moving average. There's no magic here. This is no rocket science. For the slightly better of the two moving averages, right, the 44-day, I've also opened an automated copy trading vault, so we don't have to manually bet on falling prices to then switch this back to rising prices. There's an automatic vault. We launched it on the 3rd of October. Since then, Bitcoin fell by 22%, but the vault already made 8% gains. And so that shows, even though on a very small time frame, that this approach can work, right? Minus 22% versus plus 8%. It's at least in line with what our backtest suggests. Measured in Bitcoin, following the trend does work. And so I see quantitative approaches like this just as another diversifier. So instead of just allocating towards asset classes and then potentially lose a lot of net worth, because many asset classes are also highly correlated, right? Let's say crypto goes down, then very likely tech stocks go down as well. Instead of having that much volatility, I think it makes sense to also simply follow rules that historically worked well in the past, where of course we do not have any guarantee that they will continue to work in the future, but at least it's better than just randomly guessing. It's better just to follow the gut, right? When we've got strict rules, then we can simply follow them and not introduce so many complications. So yeah, I'm currently cautiously optimistic. The moving average that historically worked better is currently bullish. I'm even more bullish once we go above the 125-day SMA. And then I will start to get cautious even if we stay above both moving averages once the extension from that SMA is too high. Once we are, say, 44% above the 125-day SMA. But we are very far away from this. First, we need to get above the moving average in the first place, and then 44% above that will bring us to new all-time highs if the price appreciates quickly enough. If you consider following the 44-day simple moving average, you can of course just execute this manually, or you can automatically follow that strategy more as described in the premium membership. Link to premium pops up here on the screen. Thanks for watching and see you next time. Cheers!